Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. Now, there are various themes that have played out in the markets for the past 2 years, whether it was the transitory inflation post COVID, supply chain constraints due to the Ukraine conflict, tight labor conditions, or more recently, the central banks on an indecisive front due to the lag effects of rate hikes. Whether the new theme in the future is all about cooling inflation or central banks over tightening, only time will tell. But as of now, it seems to be an interesting time in the financial markets, especially after the US CPI. Yesterday, we also had the PPI figures, which further hammered down the inflation has cooled narrative. Good morning, JK. How are you reading the current market sentiments? Keen to hear your thoughts.
Good morning, Swaraj. Speaking of different themes playing out, I can see that the current theme in the currency market is very, very telling, because I'm seeing a clear correction in the structural undervaluation of some currencies like Euro, GBP, and Yen, and that's being really played out. So you can see that dollar index, for instance, which has a maximum weightage from Euro, has moved down by around 3.5%. And we have been mentioning how sterling has been moving in the recent past, and then yen has fallen, dollar yen has fallen about 5% from 145. And the theme possibly, which is like not so much highlighted, is that with US yield attraction reducing after the fall in the pressures, and also perhaps deflation taking over, the diversification probably has got a momentum, and that's why people are buying into Euro, GBP, and Yen more particularly, and some other European like Swiss franc, Aussie, for example. Some of these currencies which have been beaten down over the last cycle, and they have really been gaining substantially. And so at the same time, you find that the currencies like Chinese yuan and Indian rupee, they are not moved so much. EM currency index, for instance, has moved up by around 1.5%. Chinese yuan has gained about 1.5%, and rupee, not surprisingly, gained only 1% from its recent weakest level. So that's the theme that is being played out. And so if you are a fundamental analyst, and if you're looking at stream of data coming weak from Eurozone, you would think that Euro should have been sold down to 1.05 or 1.06, but that's not what is playing out right now. Similar in, yesterday, the latest evidence came from industrial production in Eurozone, which came at much lower than expected. People are not sure. They might still enter into another quarter of negative growth. Then GDP growth in UK was 0.1%. Contraction, and much worse than expected. Industrial production was also down. It's not the fundamentals that the near-term fundamentals that are driving. It's a larger cycle that is at work. That is how I am seeing it. Yes, some of the regional currencies definitely have risen much more. Like Korean won is up by about 5%, and then the Philippine peso, for example, is up by 8%. But these are actually high beta, Asian currencies which move much more. But if you look at the Indian rupee or Chinese yuan, or even the Indonesian rupiah, for example, has not moved so much. So much for the theme that is playing out. Rupee yesterday again. This time it was not a surprise that rupee did not strengthen beyond 82, and market was quite prepared for it to stabilize around those levels. And now what we are seeing is that the rupee has been weakening a lot against other currencies like Euro INR, for example, is close to its all-time high, and maybe GBP INR is also moving towards it. Currently at 107.50. And all-time high, I think, is around 112. So INR is definitely getting relatively undervalued. Maybe the RER is now slipping back below 98 once again. But for it to really do some catch up on the strength is to see if the RBI changes the policy, because their policy is quite correlated to where the Chinese yuan is moving. We still have a very high deficit with China, and that's increasing, whereas our exports are actually on the lower side for, actually reducing with China. Speaking of the trade also, Indian government has actually restricted the imports on the plain gold jewelry, to restrict the import bill. So you cannot import plain gold jewelry, unless, just the raw gold that you can import. And also there is a consideration to ban exports of non-basmati rice to address the local price pressure. So this is some things in the works as far as Indian trade is concerned. Even the global trade yesterday, Chinese trade data showed a big fall both in the exports and in the import, and that's adding to the woes of the Chinese economy, where there is already a deflationary pressure working through. And so in fact, for the quarters ahead in 2023, the United Nations Conference on Trade and Development suggests that there will be a slowdown in global growth, pointing to recently downgraded world economic forecasts and factors such as persistent inflation and financial vulnerabilities. They also point to the fact that trade interdependence between US and China is also one of the reasons why the global trade is falling. So this is on the trade side. But coming more specifically to the market, the US stock markets took the PPI data, which came again lower following the weaker than expected CPI with both hands, and we had a Nasdaq which closed 1.5% higher. The frontline stocks like Amazon and Alphabet gaining a lot. S&P 500 advanced 0.85% and now climbed above the 4,500 psychological mark as well. On the yields, they were down again. 2 and 5 year tenors fell around 13 basis points to 4.61 and 3.937. Just to recall, they were at 5.12 and 4.09 not very long ago. And now the Fed pricing expectations for July is still around 90%. But what is interesting is emboldening notion that after July, Fed is more likely than not done about the current tightening cycle, with an increase in expectation for rate cuts over 2024. Just for an example, at the start of this week, market were pricing Fed fund rate at 4.10 by December 24, and now the market is pricing at 3.71%. So more specifically on the FX, dollar index has definitely broken the psychological level of 100 now, trading at 99.75. Euro is clearly heading towards a strong resistance at 1.125. So not very far. I think short-term feels some pullback possible because it looks overbought, and even the dollar yen below 138 looks oversold rather. And GBP, yes, could move towards 132 before it stalls. Of course, with the improved risk sentiment, even the commodity currencies like Australian dollar, Canadian dollar, and New Zealand dollars have also gained. So we have a very active market, particularly in the currencies. And it looks like the animal spirits have, once again opened up in the currencies, and perhaps even in the stock market as we move along. But one will have to see how, going forward, the Eurozone and UK economy and the Chinese economy perform, because the continued underperformance by them may pose some doubts into the investor minds, whether they're, tending to overvalue them in the short-term basis. Yeah, thank you.
Thank you, JK. And I think after a good quiet period now, for the past few days, we are having good volatility in most of the pairs, at least currency-wise. And when we see dollar index, of course, it has broken below the psychological level of 100. It is down around 3.5%, while Euro, GBP, and Yen all have strengthened against the dollar. This is primarily because the US yield attraction has reduced, and there are fears of deflation taking over. So, as JK mentioned, there might be a possible diversification theme at play. When it comes to data, Eurozone industrial production came weaker than expected, and Euro still has rallied from that. Rupee did not strengthen beyond 82 yesterday. We are seeing weakness of INR against other pairs though, like Euro and GBP. Euro INR and GBP INR, approaching close to their all-time highs. Uh, so when we look at from China, we had the weak trade numbers, which is again concerning for the overall economic scenario. And on the domestic front, uh, Indian government has restricted import of plain gold jewelry, and there is also consideration to ban export of non-basmati rice. That's it from us today. Have a very good weekend. Let's catch up again on Monday for another round of fresh updates. Thank you so much for listening.